Hi traders, Jeremy here with See the Waves. We are a market education firm that teaches traders how to see the waves. And today I would like to talk about Bitcoin, perform some technical analysis on Bitcoin. The style of technical analysis that we use is Elliott wave theory. So we'll get into that here in just a moment. I want to start off with some multiple time frame analysis on Bitcoin. We're going to start off with a daily chart, taking a look at this price channel, and then we'll move on over into some Elliott wave theory on the intraday chart, the 2-hour chart. So to start off with, I do believe that Bitcoin is poised to fall and could be falling from near current levels down to as low as the low 8,000s. And one tool that I use within Elliott wave theory is price channels. And what's interesting about this chart that we're looking at here is that we've got a couple of touches within this price channel and the midline taking place at these points. So the market believes that this particular price channel is important, and a couple of weeks ago prices did fall below the midline, and I think that Bitcoin is working itself down towards the lower end of this channel. The lower end of this channel currently sits down near 8,400. There's also some horizontal support from May 10 all the way down near 8,000. So this could be an area where we could see a significant positive reaction. But until then, I think this Bitcoin chart may be working itself lower. Moving on over into an intraday chart. Okay, these labels on the chart are Elliott wave labels. And starting from left to right, what we're looking at here is an impulse wave. This impulse wave begins from this high, moves all the way down here to this low. We've got it labeled as 1, 2, 3, 4, 5. Now at this low on June the 25th, I sent out an alert to the subscribers saying that I'm looking for a slight recovery, but I would expect that to hold below this high of 98.06. And so we did get a little bit of a bounce, and then prices fell off from there and then have been trading around sideways until recently. Well, last week we had seen 3 different patterns showing up on July the 3rd, and at that point I sent out an alert to the subscribers that said that this was either poised to fall right away, or we may get one fake out higher. And so here is what we're looking at from that report. So one thing that I note on this is that the termination of that bullish expanded flat was shallow compared to the bearish impulse. So this implies a couple of things: that either A, the market's very weak and so weak that it couldn't muster up a higher retracement and therefore it's getting ready to fall and fall hard, or that a bullish expanded flat is the first up wave of a complex correction higher. So going back to the chart, that was on July the 3rd. And so we've got an impulse wave lower, then this red ABC was what we were looking at after July the 3rd. That's an expanded flat. We've got an ending diagonal triangle, ending diagonal pattern taking place here in the C wave of that flat pattern. So this was a very bearish type of pattern. And it barely made itself up to the previous 4th wave, and so it was a very weak rally. So like I said, that either means that the market's really weak, or it's just the first leg of multiple legs higher. Well, we did sell off a little bit, and now we've gotten this second leg higher. Now I do believe the second leg higher is over. I'm labeling this as a zigzag pattern in Elliott wave terms. I've got it in the red labels A, B, C. Now, why do I think that this particular pattern is over? Well, first of all, the sell-off since then has overlapped with the swing high that took place right here. So we have an overlap with that high that seals this move higher as a 3-wave pattern. 3-wave patterns are synonymous with corrective patterns, and corrective patterns mean that they're going to be fully retraced at some point in time in the future. Okay, so since this particular corrective pattern appears to finish off a larger pattern, then I think we're going to get a full and complete retracement fairly quick. The second thing going on here with this zigzag, this bullish zigzag pattern, it's 3 waves, and then also we've got some wave relationships taking place. So the C leg is related to the A leg. So you notice right here, okay, we've got a couple of things taking place. First of all, this is where the C leg is 61% the length of the A leg at 9,500. It's also come up, and when we draw a price channel where we connect the end of the start of the wave, or I guess the beginning of the wave, and the end of the B wave, and if we duplicate that line on top of the A, we've come in and we've touched the midline of that channel as well. Okay, so that's confirming for us that these two waves are related. And I say these two waves, I'm talking about the A wave and the C wave. So they're related in Fibonacci proportions. They're also related through this price channel. And then a third thing that tells us we've got the potential of a reversal is if we throw down a Fibonacci retracement level, the 61% retracement level comes right on top of here as well. So we've got 3 different points of action all coming together at this high. And so this signifies that this leg of the pattern is over. Waves are going to alternate from going up to down. So this up leg is over. That means we're on course for a down leg. And you know, we're starting to see that take place now. Will this down leg break down below these lows? That's what I would set up for, but it doesn't have to. This could continue to drift higher. But what we have going on that's different now than what we had on July the 3rd when I wrote up this report is that the termination of this combined complex corrective pattern higher is no longer shallow. Okay, it has now retraced 61% of the previous down impulsive wave. And so this tells us that this is ripe for a reversal that would completely retrace this whole up move and possibly even dig down into lower levels. We can estimate, by the way, we can estimate how low this pattern may roll. So for that, I'm going to come out here and we're going to add the Fibonacci extension. Now I'm going to compare this impulse wave. Now notice I'm going to compare the low of June the 24th and not the low that we see on June the 27th. The reason I'm going with June the 24th is because that is the end of the impulsive wave. And then I'm going to throw the correction since then, and we're going to compare and see where that goes. So we've got a wave relationship down here at 8,700. So that could be the next stop if this continues to work itself lower. We've also got some lower levels. We've got that 8,400, which is the lower end of that channel I was pointing out on the daily chart. We've also got 8,200, which is a 1618 wave relationship. So, you know, down here in the lower portion of the 8,000s, we've got a few things showing up. So I suspect that we may see Bitcoin correct down to these levels, then see a fairly significant rally. Zooming in a little bit on this chart, we could have the start of an impulse wave going on here. Wave 1 lower, wave 2 higher. This was a wave 3 lower, a wave 4 higher. So wave 4 could drift a little bit higher than where we are right now. Probably not much. And so I think we're close to setting on that fast track towards lower levels on Bitcoin. Now, if you like what you're seeing here with regards to the technical analysis on the key markets, give us a thumbs up below. Drop a comment into the comments area. Let us know what you think, and we'll look to get more of these videos out for you. But until then, I'm Jeremy with See the Waves. If you are unfamiliar with some of the patterns that we talked about here within See the Waves, I've got a guide that covers the 5 basic patterns for Elliott wave. Hope you'll check it out. You'll see it in the comments area below. And until next time, I want to wish you all the best of luck in your trading. We will talk to you soon. Take care. Bye now.